All righty, good afternoon, traders. Exciting day in the market today. Let's just jump right into the markets and our trade account on the session. So a pretty good down day on SPY, not the biggest, but a decent down day. I know I got a lot of lines on the chart here when we're looking at SPY, so I'll see if I can zoom in and make it easy. I know it's a lot of spaghetti on here, but SPY dropped 1.5% today, so 1.5% down on SPY. Same on the Qs, IWM about 1.3%. So overall, pretty decent little down day as we look at it. So again, not the worst. We've seen some worse days in the past. However, we did break some key levels again today. If we look over here on the weekly and we look at this fib level here, the 38.2, was sitting right here at 429, which is where we stopped yesterday, bounced off of it. Today, it's pretty much where we gapped open to and then fell below. One of the things that we had noticed this morning too, and it was pointed out by myself and also by Gabe in our Discord, was that ES had a gap to fill and was able to fill that gap today, got a little bit of bounce and then continued to be a little bit weak after that. But we knew that gap fill was a very real possibility, and it did get filled on ES today. If we're looking at this head and shoulders, we are now well into beginning that head and shoulders pattern. The next piece here is to fill this gap on SPY. And if we're looking at this gap on SPY, I'm going to extend it out a couple more days, but you're looking at 422 on SPY. So on the SPX, 42.22. which is another 50 points down from here on SPX. So SPY managed to drop about 60 points today, and it's very possible that if we go to fill this gap on SPX tomorrow, we could get another 50 points down. Could get a bounce. Let's see. There's no reason for the markets to really, just turn around here and just start heading higher. I would think you've got to go down a little further before we potentially bounce. Now, we do have some support down here around the 420 range. That's also the 50% fib. So we've got a gap fill here, which could give us some reason, some support and potentially a little bit of an opportunity to bounce. We've got a gap fill above, which might be a good little target. Either way, these two things will present a reason for us to continue to have lower highs and lower lows as we started this new downtrend on SPY. So there's our targets. My next target's going to be this gap fill here at 422, and then the 50 fib retracement about 420-ish, which is also a previous level that we've gotten into. So we'll keep an eye on those and see where we land on those. All right, so there's SPY. Let's jump into the Qs. Pretty much the same type of scenario here today. Breaking down now on the Qs, let's go back to SPY for a second. It's hard to see because I got all this junk on here. In fact, let's just pull this off and let's pull these fibs off. A little cleaner charts, a lot nicer. If we look at the 3 ATR, we smashed below that, and we are pretty extended below the 3 ATR, and our RSI is definitely oversold. We haven't seen any reversals on the weekly or the daily at all here, but this is in a very extended level. We don't break through the 3 average true range on the Keltner channel very often and then stay below that number. So you're very well below the Bollinger Band and the 3 ATR. Could be enough to get maybe a snapback tomorrow. I would rather see down early and a rally later than rally early and drop throughout the day. If we look at Qs, same thing. We popped below the 3 ATR, and then we're also oversold on RSI as we're heading lower. Next stop might be the 38.2 fib at 348. Maybe that's a little bit of a level in here. We'll see what happens. Still looks pretty bearish overall to me. And if we're taking a look at where things are here on the Russell, IWM, another down week, another big down day. Again, overdone and extended to the downside, but we know we can live there for a little bit. Let's just see where this thing decides to reverse higher. My guess is that we may at some point come back up, try to fill this gap, and then we maybe head lower on the trading. Now, VIX popped all the way back to 19. Wow. Somebody was pointing that out. Hey, VIX is just waking up, and VIX is woken up to 18 or 19. You know, VIX spent its entire year a year ago in above 19 and 18. So it was never even below those levels a year ago. Now people are freaking out when it gets back to that level. You know, these are levels that we haven't seen all the way back, dating back to February, where again, from before February, really all the way back here on April. April was really the first time that we really got below 18 or 19 at all in VIX. So VIX is just getting back to where it lived all last year and the first half of this year. It's good. You're getting some great premiums in there. It's not crazy. If it's crazy, it's in the 30s, 40s, and 50s. Okay. Right now, you're talking 19. I don't know what it's waking up to, but it ain't doing much. On the US dollar, just being driven higher by interest rates rising. So rates rose again today. Dollar rose again today. You know, overbought on both the weekly and the daily here with just a relentless 11-week straight week march higher on the US dollar, as this is the place to invest. You know, this is where interest rates are. Let's invest in the US with these high rates. And if we take a look at where those rates are, you know, another high today, 45.58. So 4.56% on the 10-year, getting to new highs. I can move the move this level back up now. So we're just continuing to set new highs and new highs on the rates here right now. Now you are again 2 days extended above the 3 ATR. So maybe we're getting a little done. The weekly and the daily very extended. The key here is, what's the pain threshold for something to break? Right now, a lot of people are experiencing some significant pain on their positions. I know for me, on one of my positions on the euro, it's getting a little bit painful. We haven't stopped out yet, but we're getting to our stop because the dollar cannot and will not relax itself. My guess is, as soon as I stop out, that will be the signal for the market to reverse and take a little bit of a break, and maybe we see the 10-year drop back to about 43 or so, where the 21 moving average is. All told, here's where we are on TLT again. This is my public service announcement yet again for the umpteenth time. Stop trying to pick the bottom on TLT. You're getting your ass kicked. Okay. If you thought it was back here, oh, look at that big gap up day. We buy. Well, that was at 94. You're at 88 now. So you're taking an absolute shellacking because you thought this was it. I shared this on Twitter today, but if you take a look, there's two downtrends here. I got this blue line, which dates back here till December 6th. And then I have this purple one that also starts at, it starts at March 28th. Both of those downtrend lines are still viable and in play. And we've come nowhere near these in the last 2 months. Okay, over almost 3 months. The last time we even touched those lines and really created that downtrend was back here in July. You are a ways away from these, my friends. So if you think the bottom is in on TLT, I don't know what you're looking at. MACD's dropping, RSI's dropping daily, weekly, getting worse, falling lower. Interest rates are going higher. The Fed's not cutting. People are investing in these. Here, it's attracting all kinds of attention here. Why would rates drop? The Fed ain't going to do it. In fact, the Fed probably won't even know what it's able to do, because you got a government shutdown scheduled to happen in about 5 days from now. The government's going to shut down, and I'm going to tell you right now, it's a 30 to 45 day minimum shutdown, in my opinion. I can always be wrong. I'm going to go out and say 30 to 45 day shutdown minimum, which means no economic data. Fed's not going to be flying blind here. They're definitely not going to be doing a whole lot of anything, but maybe they'll still raise rates in the November as anticipated. Maybe by then the government will reopen and they'll get some shocking reports. But my guess is things aren't going to improve from the Fed standpoint. But again, TLT, there is no bottom here. We have not begun to put in any kind of bottoming action. Your 50-day is only on a downward slope. Your 21-day is on a downward slope. Your trend lines are on a downward slope. Your 200-day on the weekly, downward slope. It's now been trending down on the daily. That does not call for a bottom. This is called catching a falling knife and listening to a bunch of idiots on YouTube telling you back up the truck and buy TLT and TMF. I think you're in big trouble if you've been in on these. I don't think the bottom's in yet. Can it be? Maybe. We are overextended to the downside, but I need to see some bottoming action here. And here's where TMF is. You've dropped from 6.3 to 4.87. 6.3 to 4.87 is a $1.43 drop on, again, 633, which is a 23% drop. So if you thought getting in here when we were mucking around with the 21 falling moving average exponential and you got in, okay, you're now down 22 to 23%. If you thought it was back here, okay, you're down 50% or 30% on your trades. Unbelievable disaster on bonds. All right, let's move out of that. That's enough PSA. Wait for bottoming action before you jump in. Okay, you don't have to be first. Okay, and those of you that thought you were first have gotten your ass kicked. All right, so the Aussie dollar here, weekday today, the dollar moved up, continued weakness, Aussie dollar falling, no surprises there. On the daily, British pound just getting creamed on the daily. Canadian dollar dropped a bit on the day. It's been holding up pretty well. The weeklies on the Aussie dollar and the Canadian dollar are not in too bad a shape. So what is in bad shape here, though, is the euro. And the euro is, I don't know what's worse, the British pound. This thing looks even uglier. There's nothing here. I don't know where this thing is going to stop. I think it just has to stop on its own at some point. Look how oversold. This is oversold as you can get on the daily. The weekly, though, is nowhere near as oversold as it was here. Now we're not at our lows, and it is lower than where it was on this particular low. So we'll see what happens. But right now, we don't see anything that we can hang our hat on for a reversal on the British pound. Euro, same thing, man. I just don't hold a lot of hope out. I'm holding on to a strangle here. It has not triggered my stop. I thought maybe we might see something close to it today. It's very possible that happens tomorrow. So it's possible I'll get stopped out, and it's fine. We get stopped out. It's all good. Future strangles. I have had a run of 7 straight winners on these. So, it's all good. If you win 90%, I think you're doing pretty well. We've only had, 2 losses in the last 5 months there. And, we'll see how they go there. But, if it happens, it happens. But the euro not looking too good here. So keep an eye on that. Oil on the session, up just fractionally, as oil is doing this, the little bit of the cool off, and then we'll see if oil starts to pick up some steam here. Oil being high is not going to help inflation. The cost of oil, the cost of gas, the cost of making processed products, that cost is not dropping and not going to drop anytime soon. I think we could see oil at 100. I think it could go higher than that in the short term. That's not going to help inflation. That's going to increase the cost of goods. Having oil that high, that's going to keep inflation up. That's going to drive rates up. It's going to keep bonds down. Gold. Gold's not performing too well either. We broke through this triangle that we've been watching. On the weekly, we got to the 50 EMA. That's where we settled pretty much on the day. MACD and RSI just heading lower weekly. They've been heading lower on the daily. We broke the triangle. We broke this downtrend. So now we're kind of in a no man's land. Maybe you could put some support around 19,412 here, something like that. And then we'll see where gold gets to. I'm not predicting a gigantic disaster on gold, but it has broken through this trend to the downside. So we could see some more downside on gold. And then on the sectors today, if we take a look at that, you had one positive sector on the session today, and that's only because it's been the absolute worst sector on planet Earth. You had biotechs here today with an up day. So biotechs gained 1.85%, but that's after yesterday's massive move below the 3 ATR for the second straight day. And this is what I'm talking about for the SPY. We are now below the 3 ATR, kind of like we did on XBI yesterday, and we got a bounce. Now, does that bounce mean it was rally time? No, it's just a bounce within a downtrend, but it could give a little bit of relief here. We'll see what happens. Otherwise, that was the only positive sector. Your worst sectors, utilities, getting absolutely destroyed, moving down to new lows, new recent lows here. So breaking through this previous low that we set back on 9.5. Utilities look ugly. XLY, which is your Amazon and Tesla, looking pretty ugly in here as well, down almost 1.82%. Tech stocks down 1.8%. So this is why that Qs and SPY are getting beat up pretty good. Now, again, it's below the 3 ATR. Doesn't mean it can't stick there, but rarely does it ever do that. It can ride it down a bit, though, but there's usually at least somewhat of a little snap back when it gets there. We'll see what happens. We are oversold on nearly everything out there. Regional banks down today. Industrials down today. Financials down today. The only things that really hung in there was oil and the XLE, because oil hung in there on the session. Those hung in pretty well. All right, I don't want to get into too many stocks because there's just nothing good, but Amazon, absolutely the worst of the big tech stocks today, just getting drilled, breaking below its 3 ATR as well, and starting to get into this oversold territory. It's been in a down decline weekly, daily. There's no surprise that Amazon's going lower. Apple broke through this line that we talked about yesterday. Pretty bearish signal to me on this descending triangle, breaking through support here. In fact, I'll leave it on because it could become resistance at some point. But I think we got some more downside to go on Apple. Microsoft, I don't even know why I have this trend here. Microsoft just continues this series of lower highs and now lower lows as it's breaking through this previous low, or trying to. Getting oversold, but we'll see. Meta hung in there today. Okay, only down 0.5% or so. We've been talking about how well Meta has really held on in this market rally. What would make me interested here would be any kind of a rally in the markets. Maybe Meta leads the way because it's least bad of everything that you see out there. And NVIDIA hung in there today, off a bit. Still want to see this gap filled, but NVIDIA hanging in there, bounced off its 3 ATR inside the Bollinger Bands. See what happens with NVIDIA, but not down a ton today. And Tesla not down terribly today. Down a bit. Still a weak weekly chart and still a weak daily chart. However, getting close to the bottom of this tightening Bollinger Band, which is really interesting to see. And we've got this uptrend line that we're getting close to again here. So we'll see what happens with Tesla. There's where we were on a number of stocks. And if we want to look at some horrific looking things out there, Boeing, below its 3 ATR and just heading lower. This stock has absolutely been destroyed from 240 down to 195. That's a pretty big hit on Boeing. So Boeing looking pretty bad out there. We talked yesterday about potentially doing something in Home Depot because it's really far below its 3 ATR. It's now below the 200 on the daily. It's a pretty bad looking chart. Is it oversold? Absolutely. Is it looking to reverse? Not yet. So until you see some reversal confirmations, I'm not getting in on that. And then we also talked about Square yesterday. Square didn't have too bad of a day, down 78 cents, but overall it's about a 1.7%. So down on the session, oversold. MACD starting to reverse, oversold on the weeklies as well. Getting very interesting. I do like Square here. I'm not ready to buy it, but I think Square is definitely very overdone, and this could be a great opportunity soon to put on some kind of a put credit spread, bull put spread. I think this is an area, and actually PayPal bounced up for the second straight day. So similar companies, similar looking charts, except PayPal never really broke down as bad as Square did. But I like the way PayPal is shaping up here as well. A couple green stocks on the day. Palo Alto, green on the day. Looking at maybe a little bit of a bounce area. CrowdStrike, green on the day, even though it opened much lower, bounced off the 50 EMA. Still not anywhere that I would be getting long on these. And SoFi, I love to just look at this thing just sucking. So SoFi struggling. And then Bitcoin. I don't really do a lot here on Bitcoin. I don't really trade it. It's not my strength to know Bitcoin and know how to trade Bitcoin. However, it's been in a downtrend. MACD's been falling. Momentum's been coming out. RSI is falling. But on the weekly, you're starting to get some improvement in MACD, and you're heading into maybe some more support here, and you're getting close to this 200 moving average. The only thing that concerns me is, you break 2,600. I think that's a pretty important level. It will trigger a PSR bearish signal. You are already below the 21 and the 50, which are both falling. You're getting close to the 200. If you can't hold up in this range in here, I think Bitcoin has some more pain heading its way, but a solid support around 2,500. So we'll keep an eye on it. I won't make it a big focus of what we're doing. Would I say jump into it? No, not right now. I mean, why would you jump into something in a downtrend like this? However, you might be getting close to some interesting areas on Bitcoin where maybe there's some opportunity if we can get some support around 2,500 or so here, or even support at the 200 moving average. Let's keep an eye on it. Getting tight, didn't have a bad day overall. So Bitcoin's something to take a look at. Overall. All right, let's jump into our portfolio and where we were on the session today. If I'm looking at our portfolio on the day, let's get into the daily numbers. Okay, today, Delta moved up to 703. So the Delta's moved up, obviously, with the market moving down. Delta's going to naturally move up. Now it's 0.24. Now, again, it's getting to be an area. This is just this constant struggle. It's like weight loss here. You just can't get these, you lose a couple pounds and then you put them right back on after a couple days of the market moving. Even though you didn't do a whole lot, you just stopped exercising for a couple of days and the pounds went back on. Well, that's what's happening here with our Delta. Even though we've got some hedge trades on, just the fact that we're dropping on a lot of our underlyings here, Delta's moving higher. Theta continues to move higher, 1394.47, awfully high theta. A little bit more than I actually need, so we could take some theta off to reduce this delta. We'll keep an eye on it. Netlick took a nice little hit today, down pretty good on the session. And then BP usage moved up, as you would expect, 80% now, which is why, again, we try to keep it around 50 for things like this to happen. 80% of which 10% of that's in bill. So we're really about 70%. We're definitely over BP'd. I'm going to give it another day or so. If we get any kind of a slowing or a bounce or something here, I'll leave it alone. If we continue to accelerate maybe to the downside, we might have to take some stuff off to keep an eye on theta, or on our delta and our BP usage. It's okay to give up a little theta in here. We did make $450 on the day. That was yet another 0 DTE trade. So what we did this morning was got in on a call spread. I think it was a pretty easy trade on this session today. I don't think anybody would argue that call spread wasn't the way to go. Not at the money, buyer butterflies or whatever the heck you're doing on it. The market was in one direction today, and that was lower on the session. So you knew it was going lower. So what we did on the day here was we got in around 10 o'clock. So around 10 o'clock, we'd gotten a little bit of a bounce in the trading day. So we opened lower, got a little bit of a bounce right around 10 o'clock-ish on the markets. And with that, at 10:05, essentially, here we got long, or we got short, but we got into a call credit spread. Everything was decidedly negative on the session, moved up a bit, but we put this on for 45 cents. And we didn't even bother taking it off today. We just let this whole thing expire. So we had a full 100% winner on that. Only $450, but you know what? On a day where the markets drop, 1.5%, you make a little bit of cash on some 0 DTE trades, which helps buffer a little bit of your account. You're making cash while theta is burning. The rest of your account is moving around. So that's perfect. It's all we need to do, make a little bit of cash while the market figures out what it's doing here. The good thing at the end of the day was we did see some bullish action. So starting right around 3:30 into the close today, the market market recovered a bit. So we came off of our very lows of the session. We'll see if we get any follow through on this tomorrow. If not, we're back at it. But overall, decent day. We brought in $450 while we just wait for our trades to come off. We're sitting on some nice long-term 112 trades. All of these are getting very close. We're nowhere near these puts, the naked puts, 3,700, 3,650, 3,550, 3,500. We're nowhere near the naked puts, but we are near the traps on a couple of these. So with the market sitting at 4270, we are inside 1, 2, 3, 4. 4 of the 6 traps. We are just getting into the trap on past the longs, and we're getting just to some of the near-term shorts of the PDS. We got a long way before we get to the bottom of the trap. So we're sitting nicely in the traps on our ES trades. And if I showed you what ES looked like, maybe I'll try to pull this up really quick just to give you a sense of what our ES trades look like. Let me give you a quick synopsis here. So let's move this over, share it with you. All right, so here's our portfolio with the E-minis itself. So here's where we are, sitting right here. Look at this thing, the baby elephant or the big elephant. It's a sleeping elephant. Here's your tail up here. If we move up, we win. If we move down, we win. Right now, we're sitting around the 21,000. If we stay right here, we're going to book about 21K. If we continue to fall down here to maybe that 4,200 level, which I'm thinking is a good target, that 4,220, 4,200 level, that should increase here if we can fall down and stay around there. If we fall a little further to 4,000, we're going to make even more money. So this is a great looking scenario. This is what our portfolio on ES looks like right now. So fantastic looking stuff. We're excited for tomorrow in the markets. Made a little bit of money on some 0 DTE today while we wait. and we'll see what happens tomorrow. All right, everybody, have a great rest of your day. We'll see you all in trading tomorrow. Good luck, everybody. Stay safe. If you like this video, please click that like button. Go ahead and subscribe. Let me know if we can help you guys out. Take care. Bye-bye.